currently joined by Mehraboon Irani, who joins us on the show. Hi, Mehraboon. Good morning. Thanks so much for joining in. Well, Mehraboon, a Friday. Hope you're feeling good before you get into the weekend. But plenty of stocks to discuss, right? So let's get straight to a couple of earnings reactions. Eicher Motors, they came out with a set of numbers, and those numbers look very, very good. The problem is competition as well has creeped in. How would you approach the two-wheeler space, and what's your view on Eicher Motors?
Well, I think, Nigel, last time when a competitor of Eicher announced something which would be negative for Eicher's prospects going ahead, I was on this channel in this very show, and I think Prashant had asked me this question, that how does it augur for Eicher? And I had said, well, Eicher ultimately is a leader. I don't know as to how the stock will react. I don't think much of a negative reaction, but I went wrong. The stock reacted very negatively, but from there it's bounced quite well. I think the fact is that you are possibly asking the same type of question. Competition is going to hot up. As far as the numbers go, I think the numbers are quite good. Whether I'll go and put money right now in a two-wheeler or a four-wheeler frontline stocks, the answer would be no. The point is, if I'm holding Eicher, I'll continue to hold it. But auto as a pack right now, the frontline stocks, I don't see too much of money being made from the present valuation. The stocks may trade here and there, 5% up, 5% down. I would prefer the auto ancillary pack on the whole.
Okay, Mehraboon, hi, welcome to the show. It's good to see you after a while. Wanted to understand a little bit about Zomato and what your thoughts are over there. The company has reported a profit for the first time ever, but the stock, of course, has also rallied quite a bit. Your thoughts?
Well, I will consistently negative as far as most of this new businesses goes. I have still not understood as to how the stocks were valued. I have still not understood why everybody was singing praises about it. Research reports were written in favor of most of these companies. So I still don't want to bite the bait and go and buy into any of these new businesses. I've been universally negative on them, and I've been consistent in that. Now, coming to Zomato now, what he announced yesterday is certainly a pleasant surprise. If you go and attend the con call, which I'm sure some of you all would have it, I think it augurs well for what the company intends to do and what it hopes to do. But do I go and buy into the stock? So if somebody says, is the stock going to go towards the 100 rupees level, I would say maybe yes. So the point is, if you're asking me at the present level, can I make a 10, 15, 20% return in the stock? The answer could be yes. The company is talking of a 25 to 30% revenue growth in the con call. They are saying that the worst possibly could be behind us as far as the food delivery business goes. So as a stock from a shorter term angle, answer is yes, the stock can certainly go up. But it still doesn't fit into the parameters which I look at while recommending a stock, certainly on a mass media and certainly on a powerful channel like CNBC. So from an investment angle, I would still like to stay away from it, while stating that the stock certainly has room for upside in the short term.
I got that. Mehraboon, hi, good morning. Just a quick word, if you will, on Dixon and Amber and Keynes and Sirma and others. But Dixon mainly, that news on the banning of import of laptops and tablets, that's being talked about quite a bit, and what this could mean. Of course, it will take time for things to ramp up. As we understand it, laptop and tablet sales for these EMS companies is between 2 and 5% of their revenues right now, but it does open up opportunities, and you got to sort of square that off against the valuations at which these companies are trading at, which is very, very high. Your thoughts?
Prashant, you're the art of reading the mind of a person whom you're asking a question, and I think the last part of what you mentioned right now about the valuation, certainly you read what I was going to state. So as a stock, in terms of valuation, certainly not cheap. If you had asked me this question a month ago, even before this ban was announced, I would have said the same thing. The company should do well going ahead, but certainly at the valuation at which it is, I'm not tempted to go and buy the stock or recommend the stock. But there is something more which goes towards Dixon, and let's give marks to the management that they have been quite focused. Over the years, I have seen them coming on your channel, being interviewed, and they remain very focused, and they talk of possibly creating value for their shareholders. So despite the fact that the stock is expensive, I am not ruling out that this company should continue to do well going ahead. Whether I personally am owning the stock, answer is no. Whether I will buy the stock, answer is no. But even the semiconductor story, I think over a period of time, Dixon could be an important player in this segment. So there could be a lot of hopes, lot of expectations, lot of optimism which could drive the share price up further. Numbers will look very attractive vis-a-vis this level at which the stock is being traded or the valuations. But somewhere I feel the stock could continue to do well. So right now it could be overvalued. It may possibly falter a little bit. People want to wait for a correction. They may. But this is a company which will be a solid company over the next 1 to 3, 4 years. I don't have any doubts on it, though I feel that I should agree with you in stating that at the moment the stock on the fundamental side looks overvalued.
Okay, well, Investec put out a very interesting note. They say that this imposition of import curbs on laptops, tablets and computers is a big opportunity for Dixon Technology, considering that the laptop market is expected to be about $5 billion in India only. And Dixon already has a contract with Acer to assemble a part of its requirement for laptops and tablets. So it's a big market now that these import curbs have come through. All right, CNBC-TV18. Mehraboon Irani is still with us, so let's get a quick comment from him. Mehraboon, any thoughts on Texmo? I mean, the stock has doubled in the last 6 months. More upsides?
Clear disclosure, personally holding the stock, and it's a decent chunk of the portfolio because I have been gung-ho. I have been recommending consistently railway stocks. So now over here, I think I watched Texmo over the years, let me be honest, and I think this company's balance sheet never gave me a lot of comfort. They made a lot of errors, clear upfront, I'm stating this, acquiring a company called Kalindi Rail, going into EPC. EPC has never been a profit-making business. We had consistent policy paralysis type of period, and this company suffered. The others in this sector did well. But somewhere one felt over the last 1 year that this company has pulled up the socks, realized that they have done mistakes, acknowledged the mistakes they had done, and with this present railway minister more active than any railway minister I have seen over the last 25 years, I think there is a lot of action which is going to happen in railways, and this company woke up. They said, watch, this is the best period for us to bounce back, and somewhere they are showing signs of delivering it. Short on execution in the past, balance sheet fractured, they have been working on it. So at 30, 35, 40 rupees where the stock was, should you give it an opportunity for it to perform in your portfolio? The answer was yes. Around the present 100 rupees, is there scope for this particular stock? My answer would be yes. So if you're high on conviction, which I am as far as Texmo Rail goes, I still believe that the stock can be bought into, and I personally have no intent to go and just book my profits right now. Clear disclosure I'm giving in this particular front. So Titagar Rail Wagons on the other side has been a much more efficient company, never made mistakes, very good on execution. So both these companies should do well. Titagar has delivered fantastic returns as far as the stock goes. Texmo is trying to possibly gallop on the outside and catch up with the leader. It will take time. So at 100 rupees, can the stock correct a little bit down? Answer is yes. But as I mentioned earlier in one sentence, if you're high on conviction that railway sector is going to see a lot of capital expenditure happening, Texmo should benefit and should do well. The management, as I mentioned earlier, has woken up, has realized that they had made errors, and possibly they are doing the right thing right now. Execution is one thing. If they continue to deliver on this particular front, I think the stock should go up much higher over the next 12 to 18 months.
All right, Mehraboon, request you to just stay with us for the time.